All right, good afternoon, team. Market's melting today.
Check, please.
Hated it.
People got out of Dodge. Couple reasons why. Target shares sinking 25%. Whoa. Target is a stable play, is it not? I mean, that's a staples company, like a Walmart. Oh, Walmart was yesterday. What happened there? Yeah. Not good. Walmart rarely misses. And we've just been kind of waiting to see when were these supply chain issues, when would this inflation stuff really have an impact on retail, when we actually see it come through the wickets onto the other side and actually spit out in numbers, particularly on quarterly reports for companies like this. You saw that the last couple days spooked the market significantly. Dow Jones today, again down over 1,000 points. And I've seen bear markets and stocks and multiple now. Let's see, we had 99, we had the .com, we had the 9/11, we had '08. '08 was caused by real estate, which is not happening this time. But when that happens, there are things that I talked about on TV. You have these increased volatility. You see bigger numbers up and down. Well, everything was up yesterday. Remember that? And then today, really big sell-off. And it looks like futures have also dipped. Let's take a quick look there. Oh, not much. But, big day when you're down over 1,000 points in the Dow. No bueno. Not what we want to see. It just kind of felt like everybody was just selling today. Everything was selling, except one thing. Let's go there, Derrick Evans, NMLS 155010. I'm a VA home loan specialist. You can call, text me if you want to buy or refi, or you can email. It's all good. I'm here to help. And I have never had, at least in the last 2+ years, I have not had this much time on my hands. It is extremely quiet. So if you need me, I'm more available than I have been in years. Let's take a look at the good news. Can we get to that? Here's the good news. Mortgage bonds. The 4.5% coupon we've still been tracking here. And we're actually up 23 basis points today. Remember yesterday, I was telling you about how even though we were down 39 basis points, pricing for some lenders got better. How could that be? Isn't there a direct correlation? There's not a direct correlation, but there is an implied correlation between the price of mortgage bonds and the price of interest rates. There is. It's related. But there's a little bit of predicting that has to be done, because when a bank publishes a rate today, they're not delivering a product for 30, 60 days. So they have to, there's a little bit of predictions that are going on. And so what the market was telling us yesterday, this is probably why I should trade bonds. What the market was telling us yesterday in rates was that they weren't worried about the sell-off in bonds yesterday. That's why I wasn't worried about it. As the market speaks, we should listen. This is lesson number one. And what we saw again today was just terrific support on this same spot. Okay. Just popped right off it. Got right back down. There's a great buying opportunity. We're creating this range here, this tighter range at the lower, sort of this, that's the head, right? Here's the shoulder. Okay. I've been talking about this. I want to see this head and shoulders play out. And it looks good. Now, when we have a big capitulation like this, and this is the other reason why this is such a big deal, where everything is just sold off like crazy. In recent weeks and months, when we've seen that, mortgage bonds have sold off also. I could have spent a bunch of time charting stuff and showing you that, but you could take my word for it. I pay attention to it every day. And today we didn't have that. We got a very classic bounce in bonds on a down day in stocks. This is great. And this is setting up what is the best case scenario. And I would still say probably the least likely scenario, but it's getting more and more likely each day, which is a reversal in interest rates. That is becoming more and more possible because there's more pain left in the stock market, guys. I'll show you a couple charts here in a second. It's not pretty. Not pretty at all. And this kind of stuff right here is just flat scary for stocks. Anything and everything. Target misses. Target's down 25%. Target? Yeah. Walmart gets smoked, has a terrible quarter. Walmart has a terrible quarter. How? Here's a good one. Okay, this is okay. There's a few different things I want to show you today. And particularly, I want to talk about, yesterday we'll correlate the 39 basis points down to what Powell said. There's a few different stories I want to hit at today. Couple of them are interesting here. Let's get those out of the way. Lions Global. This is a humongous company charged with massive fraud, awarded a $5 billion fine. How bad do you have to screw people over to get fined $5 billion?
No!
Pay attention to that name. Be careful where you send your money, folks. That's all I can say. Be careful who is managing your money. JP Morgan investors tell Jamie Dimon to take a hike, son,
Check, please.
on that bonus. Disapproved of his $52 million annual bonus. Good Lord, what is going on? This is the kind of legacy bullshit that really shouldn't be around anymore. Got a single individual, who's just happens to be a CEO of a bank. The banker CEO makes $52 million in bonus. Come on. I mean, that's ridiculous. Completely ridiculous. Here's what Powell said yesterday. The Fed will not hesitate to keep raising rates until inflation comes down. The reason why that caused a little spook yesterday and the reason why we lost the 39 basis points isn't because of raising rates. Remember, raising rates is deflationary. That's good for bonds. What the bond market, I'm not sure if the bond market has priced in the fact that the Fed has been saying they're going to clear their balance sheet of bonds, meaning they're going to become a seller. They haven't sold anything yet. It almost feels like the market doesn't believe them. The price action we've seen so far, one of two things. Either the market doesn't buy it, and then yesterday makes sense because they hear, hey, the Fed is willing to do whatever it takes, which includes selling bonds. And so the market gets spooked by that because they don't believe that the Federal Reserve is actually going to sell bonds at any point in time. Or it's already priced in, right? And yesterday was just an update in stocks. And so the bonds became kind of yesterday's news. Not sure which one's the case. I'm a little bit worried that it's not priced in. How could it not be, though? They've given us exact details. They've given us exact amounts. I don't work on a bond trading desk, so I don't know what the mindset is. But if it is priced in, then I think our reversal here for rates has a much better chance. Here's the other one. Everyone was posting this one today. Short-term rental rules approved in San Diego. New short-term rental ordinance has been finalized by the city of San Diego for the first time since the issue hit the market roughly a decade ago. The city will now cut roughly half of the current whole home vacation rental stock, holding the total number of vacation rentals to 1% of the San Diego housing market. No more than 5,400 whole house units will be permitted to be used as short-term vacation rental, cutting the STVs by half. Permits will be granted through a lottery system, aka better know somebody. And there will be quite a few disappointed vacation rental hosts. Oh, no. Why?
It is your destiny.
Why? Why? We all know why. It's a hotel lobby. Hotel lobby doesn't like it. This is more than just homeowners who don't want their neighbors to own vacation rentals. It's more than that. That's the excuse. And I know there's some places it's bad, especially coastal. I totally get that. I really do. I do see both sides of this. But it just doesn't seem right that the government can tell you what you can and can't do with your property. It just doesn't seem right. Now, if you have an HOA, that's one thing. But for the government to come in and say, hey, guess what? You cannot do this with your property. That to me just doesn't seem right. This is going to take some people off. The question is, will this bring inventory to the market? Sorry, I should have zoomed this in a lot more. Maybe I can't. I guess you can't. There you go. Will it bring inventory? Will people who are doing Airbnbs, or will people just ignore it? I'm not sure. People are worried about inventory. I'm not too worried about inventory. A lot of people are worried about it, but I'm not yet. It's still really low, and it's still decreasing year over year. So, give me a month over month. We've seen some shorter term stuff, more than just a month over month number. Let me see the year over year start to increase. Then we'll start talking about how inventory is impacting the market. I don't think inventory is impacting the market right now. What's impacting the market right now is payment shock. Let's be very honest with ourselves right now about what is going on. We have a, and this is what I've been telling you, to pay the most attention to is sentiment. We're going to look at some charts here in a second. Sentiment of the market is the most important thing to pay attention to. How do people feel about it? What's really going on, what's really happening may not matter to a lot of people. How they feel about it. So what's happening right now is people are getting payment quotes and they're getting deflated by it. Hey, we're pre-approved. We're interested in this property. Here's the address. Here's what we're considering offering. What's the payment look like? They get that number and they're just like not stoked.
Hated it.
It doesn't make them want to jump for joy or be excited about owning that place. That's what's happening right now. And even though rates have gone up, have been a few people who I've sent payments to and they're like, that's perfect. These are usually people who are buying at like half what they're pre-approved. They're pre-approved for $1 million. They're buying a condo for $450,000. But for a lot of people right now, it really is all about the money, and it's just hard to swallow. It's hard to swallow. You feel late. You feel like prices have gone up. Rates have gone up. I really missed the boat. I gotta have a place to live. And it's causing the rental market to go nuts. I talked to a guy yesterday who owns a ton of properties, and he was telling me the rents that he's getting here in San Diego. He's got properties everywhere. You know, talk about a dude who figured it out. He started buying properties 20 years ago here, and just as many as he could get his hands on. And I called him. The first thing he said, I called him. I was like, "Hey man, what's up?" He goes, "Nothing. I don't do much these days." He's like, "Yeah, what's going on with you?" I was like, "Good for you, bro." But he was telling me the rents that he's getting for 1,000 square foot homes, $5,500 a month. He's like out the door, like just. It's like I can rent anything immediately, and so rental market's going nutty. So the pendulum's swinging a little bit. That pendulum will come back. So if you're like me and things seem slow on the buyer side, if you're a mortgage, if you're a buyer's agent, that pendulum will swing back a little bit. What happens is people are they're not liking the number that they're seeing for the purchase. So they're going over here to the rent side and going, I think I like that number better. And then they're going and getting involved in that process. And that is becoming a crazy landlord market. And so they're going to have to kind of experience some pain on that side too. And that doesn't necessarily mean signing a bad lease. That means just like going over and getting into those bidding wars and trying to do that hustle and realizing that it's also a difficult road. And then people will come back on this side. So the pendulum will swing back. So just know, right now it's quiet. Enjoy the quiet time. Make some extra calls. Follow up with your past clients. That's what I've been doing all day, pretty much every day all week. It's a great time to reach out, reconnect, remember some of the people that you've helped in the past. That's where I'm spending my time right now when I have it, and I would suggest you do the same. Now let's take a look at some stuff. Let me get myself out of the way here. A couple things here. Okay, checking there. Bitcoin. I'm not gonna look at that. It's really the Dow Jones, down 1,100 today. So we channeled these last week. Just decided to go look at the channels. It's definitely channeling lower, and you can see what happened today. You zoom into that candle right there. Where are you, buddy? Right there. It came down and it pretty much touched that trend line that we had drawn. And that I'm not touching those; those have been there. It's just this is where it's headed, right? This is what's going on with the Dow Jones right now. It is speaking to us. It is telling us that downward action is probable. I don't see support for some time here. There's a little bit where we closed today. There's a little bit down here, but there's a big gap down here that never got filled. And I don't know if you guys can see this. It's kind of small. There's a big gap down here that never got filled, and that is in the $28,000 range, $28,500. I kind of have a feeling that's where we're headed. So that'd be another 3,000 in the Dow, another 10%, and would confirm a bear market. So that's my prediction. In the NASDAQ is actually holding up nicely on some previous support over here in this range. But, it's also got some of those big high-flying names. There's the downward velocity in the NASDAQ is likely to be pretty significant as well. I hope I'm wrong. I hope the markets do well. I really don't want to see this, but I am short the NASDAQ, full disclosure still. And the whole reason why I did that, a couple months ago was just to protect against downside and just as a hedge, and it has worked out well. I'm glad I did it. But I hate shorting the market. I feel like the most anti-American. It's so not me to bet against these things. But you gotta, knowledge without application is useless. So if you have knowledge, apply it. Bottom line. S&P is in a similar, downward channel here. And remember the support level, we drew that. That got taken out. Let's go ahead and get rid of that guy. See you later. Bye-bye. Although it did play a factor in today. That's kind of where things closed yesterday and started and just straight down. So, Target and Walmart missing is not a good sign. And I wish I had some good news for you on any of these fronts. And really, it's just the formation of what's holding from an interest rate perspective is encouraging. It is. It's encouraging. And the fact that, Powell came out and has said, hey, we'll raise rates if we need to. Remember, that's not a bad thing for mortgage bonds right now. If they remember the last time they raised rates 50 bips, we saw a huge drop in rates that day. And that was super sick. But people didn't understand that, right? The press that's going out, and this is what comes back to the sentiment, the press that's going out on those days is the Fed raised rates, even though rates dropped. So that's where I'm talking about the sentiment. We have to continue to try to inform people about the truth of what's going on. And it's very, very crucial to understand that a crash in the stock market does not mean that there will be issues with employment, does not mean that there will be necessarily issues with real estate. The stock market runs in cycles. It's due to come back. Look at where it's come from. How far do I have to go back here? Here's the 2020 crash in the S&P right here. That's the COVID crash. Look what's happened since. It has been absolutely on fire. It's the reason why Meet Kevin has any money. He's really doesn't know what he's doing. He's proving that now. And but anyone can be a genius in a bull market, right? You just buy whatever and it works. Here's the fib levels for the S&P. So, just a traditional 50%, retracement. Assuming that the longer term bull market's still in place takes this S&P down to 3,500. That's another, 12, 15%. And that would still be kind of bullish long term. So I'm not even being negative here. That's just a normal corrective pullback to the 50% retracement. It could be, if it's more bullish, then maybe it pulls back in one of these other ones. Maybe it gets to the 382 and then comes up. But I think it's gonna take that one out. So anyhow, I won't get into too much TA. But bottom line is this: stock market bad for sentiment. Sentiment important for real estate. Let's keep a close eye on this, and just keep me posted. Let me know I can help. I got time. I'm here for you. I want to help you, your friends, your family, your clients. People you care about. You want to make sure they get a good deal. Give me a shout. Submit your scenario. Maybe you got a quote from somebody already. You want to see, hey, does it add up? Is it worth it? Is it a good deal? I can help you out with that. You guys have a great day, and I will be in touch with you soon. Take care.